Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day. Ira Epstein of Linn & Associates with your financial market wrap-up, and this is for Thursday, the 4th of May, 2017. But because we're after 5 p.m. Central Daylight Time, you're already looking at trade for Friday. And I wanted to wait today because with the craziness we had, the question is, do we get a lot of early follow-through? What was going to happen? To make a long story short, what got annihilated today, and that's probably the best word I can use, are the metal markets. They got beaten up terribly to the downside. The energy markets beaten up to the downside as well. Normal correction in the grains. They won't open until 7 tonight. Nothing much there to be studying. And, of course, in the currency markets, it was a day where the dollar was down against the euro and the yen still feeling, in my opinion, some of that pressure coming out of it because the world doesn't seem to want to own risk-off commodities. In other words, when people get scared, they don't want risk, they'll buy the yen. That's not what's going on right now. They'll buy the gold. That's not what's going on right now either there. So if we take a look at what is taking place, we understand that today everybody's going to claim a victory because the House did pass a first step to getting Obamacare repealed. In other words, they passed it. But it's going to the Senate where by the time the plan gets reworked there, it's not going to look the same that it does. Then the question is when it comes back into a committee between the two chambers, can they make any headway to get enough people to pass it? There's a long time in coming. But for the moment, it is a victory for Paul Ryan. The market liked that, and it held up as things went on during the day. It's a victory for President Trump. So those are all good things. Now, the market holding up here, as I said, for the week, and this is a weekly chart, you're up just 4 points. You're not up very much one way or the other. You haven't been able to punch through this all-time high, nor have you broken down very much. So there's a lot of good and bad there. As we take a look at settlement prices, you still haven't been able to get over that high of $23.87 on a closing price, but you're not that far away from it. You're up, what, 1.5 points? That's not very much. Are we going to fill this gap? Don't know. The market is taking an awful long time in making that decision. You do realize if something overnight were to come out real positive and the market opened higher and cleared this area and didn't fill, you'd have a breakaway, then a runaway gap, and God knows where you'd be headed. As you take a look at the chart, you've got a clear pattern of a higher highs. You got a lower and low. The market is looking for direction here. It is not yet trending at this point. It certainly has upside bias. It's certainly near the highest highs it's had. But if you strictly pay attention to the pattern of higher highs, higher lows, that's missing. Everything else bullish right here. When we take a look at the upper Bollinger Band, 2407.75, that gives you enough room where the market's away from that, and you've got an embedded reading. So in a nutshell, I change gears tonight. And what I say is until the red line closes back under 80, this market's re-entered the bullish phase. I realize it's just sideways, but it's kicked in gear again. The Dow is not in that camp. It's just an overbought market with a higher high and a lower low. Yes, it has upside bias. If the other indices go, it won't be left behind, but it's not going to be your leader. The NASDAQ is full-fledged leader. Market's got the embedded reading, pattern of higher lows, higher highs. It could be headed to the 5708 level if it decides to move on up to the big side. Or remember that, the Jeffersons, move on up. I remember that. Okay, the Russell 2000 index, lower highs, lower lows into the 18-day average. As I mentioned yesterday, let's get to yesterday. You were coming here, I said, wouldn't be surprised if you challenge that. If it gives ground, you might be able to reach down for the lower number. But in the process, you're working off an overbought condition, and you're no longer overbought. The market is now out of it. So far hasn't been able to reach down to that 100-day average. So the 18 is doing its job of support. The VIX, a big outside day down. Until this number's taken out, a bearish formation in place with an embedded reading. If this market's going to go, it's got every reason as a technical part now to move on down, and if it does, that could be the signal that the stocks want to go again. In the June 30-year bond, if you knew nothing else, and I tell you that when markets are like this, the first challenge of an upper Bollinger Band or a lower Bollinger Band is off. The trade takes money off the table, assuming they're short or whatever. You can see that challenge there. That's why you're getting a stall right here. You are oversold. We know the Fed is back in play for the June number in a big way. We'd need to get some really bad economic data or the stock market falling apart or something, and we're not getting any of that right now. So I still say the Fed is in play. Could get a bounce out of that. TLT, the ETF for the 20-year bonds and so on, well, you got a higher high and a lower low, oversold, but you're still in a bearish phase because you're under the 18-day average. Support comes in between 120.49 and 120.22. As we come to the 10-year notes, they haven't broken enough to get down to the lower Bollinger Band around the 125 level. Easily could. Resistance back up to the 18-day average of closes. You'd have to get up to this high and take that out to negate this bearish phase the market's trying to get into. And in the June dollar index, a big day today. When the dollar index opened last night and in early morning, you got a reading of 23. You had lost the embedded reading intraday, not even on a closing basis. As the day wore on and prices started dropping, traders got aggressive. You've got your embedded reading fully in place until today's high is taken out. And I view today's high as very important because it had that reading intraday and in addition a down day, an outside day down under the 18-day average. I would view that you'd have to take that out to get what I call a bear trap. Barring that, should the market decide to move lower, next objective could be the 98.02 zone, the lower Bollinger Band. In the euro currency, same type of play, up and away, outside day up. Until you take out today's low, I'm very favorable. But just like in the dollar index, really what's going to rule the day in both of these are their embedded readings. And this one is bullish until the red line gets under 80. It stays bullish in the dollar index until the red line gets back over 20. It remains bearish. So, excuse me, you put that all together, you got quite a game. The British pound's had an embedded reading. It's spent most of this time, though, going sideways, which I don't like when I see that with an embedded reading. It's spending its power trying to get it going. You don't want to see prices under today's lows. If you did, I have a feeling that would probably do the job. I don't trade by feelings. I obviously have a pair of eyes so I can watch the market. It's bullish until you lose the embedded reading, period. In the Japanese yen, the support that we had talked about here all week long has shown up at the 100-day average in the lower Bollinger Band. At the same time, you have the embedded reading. So rallies in this market are likely to be met with open arms by the sellers waiting for that to occur. Lose the red line back over 20 on a close, they'll change their gears. Now what about crude oil? Down to 45.54. If you look at Brent crude, which I do because that is what OPEC obviously is about. It's not about WTI blend, it's about the Brent blend. They got within 47 cents, I believe, from their November of 2016 low when they did the production cut. Now that doesn't mean it's a failure because they did drive prices up very nicely into the mid-50s and everybody got a benefit of a higher price via lower production. Did it all balance out? Well, I haven't done the math on it, so I can't begin to tell you if it balanced out or not. But what I can tell you is the market needs to find the sweet spot. The sweet spot, and I'm writing about this for my nightly report tonight, the sweet spot is one thing. It's where U.S. production stalls out because prices are not high enough where they can make enough profit or hedge enough profit in, so the rig count stalls out. And it's where you burn up supply because OPEC takes supply off the market, so world supplies dwindle. We are not there. That's what this market is screaming loud and clear. You haven't hit the sweet spot. It also almost forces the hand of OPEC if they want to hold prices together at the May 20, I think it's 25th or 27th meeting, to not only keep the production cuts going, but maybe talk a big game that they're going to make them deeper. However, the real key here is the sweet spot number. I do not think they have to drive prices higher. I think the sweet spot would be finding where you can burn off all this instead of them keeping to support the market. And if I were an analyst with them, which they haven't asked me to be, that's exactly what I would be telling them. Keep the market at a number. Don't do the deep cuts. Don't try to put it artificially higher. Get to a number where U.S. doesn't produce as much, your production is down, let demand, world demand take care of itself. Maybe that will do the job. And with China being weaker, that is hurting this as well. Gasoline prices. I read an interesting article and people talking about gasoline coming down because it's higher than it was a year ago. Okay, but it was pretty cheap a year ago. So I guess what it comes down to is what's cheap. In any case, weather hasn't been good. The driving season hasn't kicked on. You had 20 inches of snow last weekend in Kansas. You've got flooding everywhere. People aren't driving yet. So the marketplace has still got a problem because we're refining too much. Our refinery rate went to, I think, a 34-year high in the month of April, for, looking at other Aprils. We're producing too much gasoline. That appears to be what the stories are. I'm not telling you that I know. I'm telling you what I read, and I digest that for you. And that seems to be what's going on until you lose the embedded reading. Chart's still bearish. And in the nat gas, you need to get into the pattern of warmer weather, which we have not had. And when that happens, Mother Nature will help. People will turn on their air conditioners, and there'll be more demand. We're at that funny time of the year where you're not that cold, you're not hot, and you're not burning the gas the way that you would want to. Got it? That's probably how you have to look at it. So you hear me talking the way I am about the research. Well, I do this in the mornings in a video that covers 40 markets. And I do the markets in the same sequence all the time. So you can take your video, go where you want, be it the soft markets, the energy markets. I'm giving you what I think the pros are doing, the numbers they'll do it at, where they would say, nah, I'm wrong, I'm coming out of this, offering day trade and longer-term trade ideas. In addition, I write at night and in the morning commentary and bring everything you hear what I'm saying and throw you the facts of the day. I read like a madman, and I try to give you a synopsis of all that. Take a look at it. What do you got to lose? We have people paying for it all the time. You can have a trial if you haven't had one before. Otherwise, you got to buy it. 866-973. Give us a call at 2077. You can also go to our website, www.iraepstein.com. You'll see the carousel of free offers. This offer is one of them. You can click up here if you're watching me on YouTube. And on many websites, it says click here for Ira's free information right under this video. Do so, and away you go. I'm Ira Epstein. You have a good day, and I'll see you tomorrow.